I'm Terry Sacka, and this is Rigged Against You. I know it's been a little bit, but I've been tied up, and I figured I would wait until some real powerful data popped up, but so much has been happening. I know those that are paying attention, you're going to love this podcast. Now, I have a lot of data, so I want to move through this. You may want to watch it twice. If you're serious about your financial security, what is coming in the short term, the next 12 to 18 months, your retirement, your IRA account, you may want to pay attention to this data. This is going to give you powerful information for making adjustments just for the time and season that we're in. And so I'm going to move through this. But before I get going, I should say the very last chart I'm going to show is absolutely unbelievable, unequivocal, just amazing data that will tell you exactly where we're at and why these assets are so important. We're in a commodity super cycle. There is a lot going on. I know it's not what you think it is. So much is happening behind the scenes. We are in a fourth turning event. This happens every 80 years where radical transformation happens to the United States. Just do the math and go back. You'll see what I mean. We're entering into that. And so this does have to do with crypto, silver, gold, and what is really going on behind the scenes. And you're going to want to get a piece of this one. So let me get going. Before I do, please consider subscribing. I don't do these often. So if you subscribe and hit that bell for notification, you will get these in your notifications so you can be on top of the information. I'm not one to podcast every day just to talk, but when I do, I like the information to be very real for your study, for your purpose to make wise decisions for your future. So let me get going here. Just to start, this is something I've talked about before. Very important to understand why we're seeing it. Berkshire's cash short-term investment position is a whopping 3.5 or 350 billion in cash. That is a huge deal. Don't underestimate what that means. He is in a bigger, and this is Warren Buffett. We all know who he is. This is a bigger cash holding position than he was before 2008. That tells you something. He is patient and he is waiting for something. But if you saw what he did in 2008 with all that cash, you'll understand why he's sitting in so much cash. So I want to show you this because this is very important to as far as the interest on our debt. You hear about interest on your debt, but look at how explosive on the right side here is the interest going on our debt. Look how much debt we are accumulating. This is just interest on the debt, mind you. We are looking to be $1.4 trillion a year come next year. Now they're trying to stabilize it, but they cannot. So something radical has to happen because we're taking up way too much of the money we earn as a nation going just to interest on the debt. That's why I say something very, very radical is coming. I think this is going to get deep, way over most people as far as what they're prepared for. I'm talking potential gold-backed U.S. treasuries and the amount of wealth that can come through crypto. So we'll touch on some of that. But this interest that we're paying on debt is going parabolic. And that is important because as we spend more of our revenue as a nation on just interest on our debt, something has to break. Either we're going to cut costs or we're going to have to find a new source of wealth. And that's what I think is coming. This is really good stuff. So what's interesting about as far as liquidity means how much, let me just do this in full. Liquidity is about how much money is in the system, in the investment system, banks around the world, the traders, and so forth. A lot of retail is in the stock market. I can only caution you're going to dramatically underperform the assets I'm talking about today over the next 12 to 18 months. So far this year, gold and silver have wonderfully outperformed the stock market, and that's not going to change going into the end of the year. Don't think it's too late. For many that think silver is near its high, gold is breaking out into new all-time highs, that, oh, this is over. You have no idea where this is going, because gold can easily be topping at 10,000 and silver easily 200 and above, if you see what I'm dealing with here. But right now, what's going on, and I'm talking about recession and economic activity, I'm talking about the fact that there's no more liquidity. The only reason we've had since COVID these years of stock market runs is because we've been printing so much money and putting it into the market system. People have been pulling out, leveraging. Leverage is unbelievable, staggering 1 trillion in leverage. Liquidity is everything. If there's no money out into the system, the banks don't have it to lend, and wait till you see where that goes. And liquidity is the most paramount part of keeping the market moving. But we're not doing that. I believe the Fed Chair Powell is by design not lowering rates. Now, my guess, rates come down here this month. Who knows how much? But they're doing it to harm President Trump, because President Trump has a plan, especially with that Mar-a-Lago plan, Mar-a-Lago agreement. If you haven't seen that podcast, go back and find it. But basically, his plan is to bring down interest rates dramatically down to probably 1% and get the dollar lower substantially. He's basically going into a new accord that is going to bring all of this down, the dollar and the interest rates. And the design of it, or the purpose of it, is to stimulate economic growth, but for America to export their goods. And so that's a really big deal. That is his plan. That's why you're seeing he's putting pressure on the Federal Reserve Chairman to lower interest rates. I truly believe they're going to let the dollar go to an extent. We have lost superiority as far as dominant world currency. I know everyone keeps saying the dollar's there for another 20 years, but this is about settlement currency. This has nothing to do with a reserve status. And China is moving with BRICS at a big pace to be a dominant settlement currency for 60% of the world. They're setting up gold depositories in individual BRIC nations as they back up the yuan with gold, using the yuan as a settlement currency. They don't want the responsibility of reserve status, but to be settlement. All of everything about the economy, all of your retirement, all of the jobs, all the wealth, everything has to do with trade. Nations trading with one another. We, the US dollar, were always the dominant currency. So countries would buy dollars, settle in trade. That has ended. We've lost the petrodollar. The dollar is no longer a dominant settlement currency. And the BRICS are now using, BRIC nations are now using their own currencies to settle trade. Well, being that we have printed trillions upon trillions in the M2, which is the amount of currency in the float, 70% of that around the world, that's a big problem, because that could potentially become hyperinflation to the United States as dollars are being used less and less. So here, when it comes to the repo. Now, I'm not going to get into the details because I have too much to do on this podcast, but the repo market is about liquidity usage. Look at, we're literally out of money. Look at on the right side. It is empty. They don't have money to loan to one another. That is huge, because banks loan to other banks every night for a small percentage so they can settle up the books. The repo is empty. They do not have the liquidity. That's why you're seeing a crackdown on loans. That's why you're seeing credit card companies canceling accounts left and right. They know what's coming, and they don't want to get stuck with people walking away from debt. With that repo market down to almost nothing, who's going to step in? We would have to print money. And mind you, we still have about 10 trillion in U.S. treasuries that have to be reissued. And these high interest rates are going to be extremely damaging if we have to do it at these rates. Trump knows what he's doing to try to get these rates lowered. Yes, it will stimulate inflation. It will also get the economy moving as loans start, housing starts moving, people start taking loans. But we need liquidity. We haven't had it in some time. They know because we're in inflation. We had way too much inflation under Biden. It got as high as 18%. We all know it because we're seeing prices from rent and food at skyrocket levels. Unfortunately, it can't really go down too much, but it could stabilize, which right now we're starting to see things stabilize. Some things are coming down in price. I know energy is. That's a little political, but liquidity is everything. And so moving forward, you're trying to say, okay, how am I going to make interest or income off my investments? If you're in the wrong place, you're going to probably make barely at the rate of inflation. Inflation is still going to be higher than what you'll probably get in the stock market this year. That means you're going backwards. But the fact there's no liquidity is a really, really big deal. And then here, this one is very interesting. This is the S&P price to book value ratio, meaning it's real value. Look at where we're at on the top. This is right before March of 2000. That is not a good place to be for the S&P. It is in major, major overbought territory. That's why Warren Buffett is sitting out with $350 billion in cash. The institutions and the large traders are selling into you, the retail people. They're selling into you. You're buying the stock market and they're selling into you. You're going to get caught holding the bag. If you ever thought of musical chairs, last one that doesn't get the chair, that's going to be you if you're all in on the stock market. It is a unbelievably vital time to be diversified out. No doubt about it, because this chart here tells you everything. We haven't been there really since what? That was 2000, 2001. And then look at how the market collapsed. We know we're getting a correction. It's just a matter of how much. This I find interesting because it's a liquidity tracker. Let me get this a little bigger for you. Now, this is the Fed balance sheet and just the Treasury general account in total. And the reverse repo balance, it all equals the red. Now, as you can see during COVID there in the middle, they put a lot of printed currency into the market. And then that is the green below. That's why you saw the S&P rise from May of 20 there in the middle to where we're at on the right side. The S&P's only been rising since we were putting liquidity in. But look at what happened uniquely on the right side. No real quantitative easing is happening. We haven't been doing it since early 22. We've been flatlined on providing liquidity, and the S&P is unbelievably overvalued. Now, what does that mean as far as how much of a correction? We just don't know. I could easily see 20%, which is not that big of a deal. But the point being, year to year, from January to December 31st of this year, you're going to see other assets outperform that stock market. And I know many people think, oh, well, it'll be better next year. The point is you're leaving money on the table. Silver is up over 40%. The stock market is not. Gold is up not as much, but wait until you see where this one's going. There are other ways to go. This is a good time to diversify in as we get an explosion in commodities. Gold, silver, copper, and cryptos. That's the whole other wild card here, because as what I'm showing you is major trouble in the U.S. banking and financial system.